Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, let's take a look at the markets. We know the Feds have a meeting today. How's that going to affect the markets? We're going to soon find out. But there are some signs out there that I have been keeping an eye on and letting you know about. And some of the things I thought might happen are happening exactly the way I thought. So, look, I was talking about my concerns about cryptocurrencies. I expressed them, and now they're all coming to light. The same concerns that I have are playing out right in front of our eyes. The same with the stock market. Sounds like I'm a prophet. I got a crystal ball, and I'm looking into the future. I'm only pulling your leg, but the truth of the matter is, lots of the things that I said I was concerned about regarding cryptos, signs that I said for us to keep an eye out for in the stock market are now showing. These are all signs of a coming market crash. So you have to be prepared. You have to be in position to protect yourself, your wealth, and your retirement. I'm going to show you what I'm talking about. A real quick look at cryptos. Bitcoin, so it's at 37,804. Ethereum's at 2,574. We got Cardano at $1.08. Hex at 19 cents, almost 20 cents. Solana at $96.68. The New World Order coin, XRP, at 62 cents. We have Dogecoin at 14 cents. Polkadot at $18.57. Shiba at 4022. If you look over here at the 52-week average, you can see that the blue dots are near the low sides of the 52-week average, with a couple of exceptions. If you take a look at these graphs over here, once again, I must express my concern that they all move in the same direction. That's not good. These should move independently, is how they should move. Don't get me wrong, some of them are, but the vast majority of them all move in the same direction. Having said that, in case you haven't noticed, Bitcoin did get above $38,000 and seems to be going back down along with most of the other currencies. We're waiting to hear from the Federal Reserve, hear what they have to say regarding interest rate hikes, along with other things as well. That's going to affect the market for the day, so keep an eye on that. Meanwhile, let's talk about some of the things that are being spoken about out there in the investment world. So whenever you're reading news about stocks and other investments, be very careful about the news you're getting. Take everything with a grain of salt. Because a lot of time, the media, what they're trying to do is push you in a certain direction so that the Wall Street giants can benefit from the direction that they push you in. Now, I'm going to show you an example of what I'm talking about. So what are smart people doing while they're moving into gold and silver? I don't know about these people here. I wouldn't call it smart. It says as stocks tumbled, the world's largest gold ETF saw record buying demand. So what are people doing? Moving into gold and silver, except for this is the wrong type of gold and silver to get into. ETFs are just paper gold and silver. You want to have the physical gold and silver. You don't want to buy paper. You want to physically own it. But this should tell you something, that there's a record buying demand. People are moving into gold and silver. You should be doing the same thing. Investors' rising interest in precious metals, often viewed as a store of value, comes as the stock market comes under pressure. So people are moving into gold and silver, and rightfully so. I've been suggesting that you take 25-30% of your 401ks, your IRAs, your retirement nest egg, and put it into physical gold and silver. Like I said, a lot of you going, Pimpy, man, my 401k kicked butt, blah, blah, blah. And I said, yeah, I understand that. But when this market crashes, the gains that you had not only are going to be gone, but so is a lot of what you originally put into it. It's already starting to happen. 1 in 4 Americans lost ground on retirement savings during the pandemic, new survey finds. This is what I'm talking about. Start finding ways to protect your retirement before you lose it all. Some of you are very close to retirement. You're like, I got a pretty good retirement savings going on. Don't be like those people from 2008 who were already retired or on the verge of retiring, and when the market crashed, they lost everything. Then they had to go right back to work, or they had to continue working for years. Some of them, the rest of their lives. They didn't have enough to retire. They couldn't afford it. Gold and silver is going to protect you from having to do that. So a Yahoo Finance contributor who joined the live show discussed ways in which the pandemic caused Americans to falter in retirement savings, how younger demographics invested in travel and experiences, and the market's volatility causing a reassessment of investment strategies. Yeah, gold and silver. 52% of Americans are behind on retirement savings. 52% of Americans. So 52% of them are behind on retirement savings. What's going to happen when the market crashes? That means people are not going to be able to retire. Gold and silver is the answer. Which reminds me, hit the thumbs up button, and if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Speaking of gold and silver, if you do decide to make the move to protect yourself, or if you just want to start investing into gold and silver, check out our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100 on your first purchase, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. For those of you considering, again, moving 25 to 30% or more of your retirement into gold and silver, reach out to Money Metals, 1-800-800-1865, and they will help you with your conversion. So, Robert Kiyosaki, the house of cards is going to collapse. Buy physical gold now. He didn't say buy ETF gold, ETF silver. He said buy physical gold. Most of you didn't even realize you can actually own gold and silver. I can't tell you how many people have reached out to me and were happy that they came across my channel and found out that they can actually buy it. So he said, put simply, it has no real value. Instead, its value is born out of trust and confidence in the government that issues it and the wider national economy. He's talking about the fiat dollar. I wish they would have made that more clear. And in times of certainty, when confidence in the government is high, fiat more or less serves the needs of the financial system. However, when the house of cards, as Robert Kiyosaki keenly puts it, comes tumbling down during unprecedented economic times, we need to reconsider how we store our wealth. The recent inflation hike is just the latest alarm bell in a string of warnings that could signal economic collapse. Kiyosaki warns that the actions of today's governments, such as spending 16% of the global GDP on pandemic and the mass printing of money, could lead to a crash so big even a dollar is considered worthless. For those like Kiyosaki who have lost faith in traditional currencies, there are a number of ways to store wealth that are independent of any central bank, help mitigate the impact of pending economic crash. Investing in real estate and cryptos are steps in the right direction, but the message Robert Kiyosaki is clear: buy gold and silver, buy lots of it, buy it now. Now, I don't agree with the crypto part. You can see how the crypto markets were affected. They lost damn near 50% of its value in just the last couple of weeks. So it's obviously not a store of value. Real estate is, but not buying homes. Buying undeveloped real estate is a safe bet. In line with his lack of trust in paper markets, he advises the investor should move away from any gold or silver derivative, whether it's futures or ETFs, because these are open to manipulation. What is vital, he claims, is to buy physical gold and silver in pounds or ounces. Not only is gold a favorite hedge against market turbulence because its unwavering value, but when the value of currencies is thrown into question, people turn to tangible assets, often in the form of raw materials because of their inherent real-world value. So people go, man, Pimpy, they've been saying their market's going to crash for the longest time. It's never crashing. I don't believe it. No, I get where you're coming from. When we see the markets too big to fail crash in 2008, 2009, that was a small crash compared to what we believe is coming here shortly. The markets have been propped up, artificially pumped by our own government with quantitative easing. That started under the Obama administration. When you take that away, then you're going to see the real values of the market reflected. And that's starting to happen with tapering taking place by the Federal Reserve, which means they're no longer going to prop up the markets. They're going to start taking that money away. And then you start raising the interest rates. Oh, the combination of the two, you could see the dollar value. The purchasing power is all but gone. Nobody's going to have faith in the US dollar anymore Because I get that all the time. Man, the US dollar is never going to fail. Yes, it is. I'll show you that. Jeremy Grantham doubles down on Crash Call, says sell-offs has started, and it has. So Jeremy there is the famed investor who for decades has been calling market bubbles, and he's been calling them successfully. Said the historic collapse of stocks he predicted a year ago is underway, and even interventions by the Federal Reserve can't prevent an eventual plunge of almost 50%. See, an intervention by the Federal Reserve, quantitative easing. The markets aren't reflecting their real values. They're artificially pumped. In a note posted by Grantham, the co-founder of Boston's Asset Management, GMO, described U.S. stocks as being in a super bubble, only the fourth of the past century. And just as they did crash in 1929, the dot-com bubble of 2000, and the financial crisis of 2008, he's certain the bubble will burst, sending indexes back to statistical norms and possibly further. He said the S&P 500 dropping 45% from Wednesday's close and 48% from its July 4th peak. That's the thing about the S&P 500. All the stocks below that have already dropped more than 50%. So what he's predicting is already happening. I would agree with this individual, but I think it's going to be a lot worse than what even he's saying. So are people selling off? Yes, they are. One of the videos on Pimpy's news network, I covered this video right here to show you one of the biggest indicators that the stock market is really going to crash when you start seeing billionaires and hedge fund managers doing exactly what I'm about to show you. Shout out to Eugene here. I will leave a link for this video so you guys can come and watch the whole thing. But Eugene has picked up something very interesting. Michael Berry has just sold almost all of his stocks.
Hello everyone and welcome back to the channel. I was scrolling briefly looking on to see what Michael Burry's been up to, and I have to admit what I found was rather surprising and perhaps a little bit disturbing. I hadn't checked up on him in some time, ever since he started to short 30-year treasury securities. You can watch a video about that explaining what's going on here, I'll link it. We're back here on the regulatory filings for Michael Burry's investment firm, Sign Asset Management LLC. You can find this information on whalewisdom.com if you want to check it out for yourself. And what really caught my eye was that Michael Burry doesn't have much in stocks. So actually I looked up here, and on a typical day, Michael Burry with his fund is managing over $600 million in investments. But looking here, you can see sold all, sold all, sold all. He did a lot of selling recently. And this most recent filing is from the 30th of September, 2021. So it's a little bit old. Obviously, when you're looking at filings, you're always a quarter behind.
He sold almost all of the stocks he was holding.
So I added up the numbers here. You look, he only has $38 million in stocks out of his typical $638 million. So that means he has only 6% stocks right now, meaning he sold out of 94% of his stocks.
Remember what I said? Watch what they do, not what they say. When you start seeing billionaires and hedge fund managers selling their stocks, 94% of their holdings were sold. They're only playing with 6% of their money. Why do you think that's happening? What they do is they sell when the stock values are high. They hold on to the money. They wait for the markets to crash. When they feel like the market has bottomed out and the markets are going to start to recover, then they buy back into those same stocks, except for they're buying the stocks at a much, much cheaper value. As a matter of fact, it allows them to buy even more. This is how the rich continue to get rich. They all talk amongst each other. They know when a crash is going to happen, and they start positioning themselves to benefit from crashes. Robert Kiyosaki said it best, rich people love market crashes because they sell high, wait for it to crash, buy low, and they buy even more. And then they benefit from all the gains as the markets recover. You should do the same. So if you see somebody like Michael Berry selling 94% of his holdings, what do you think you should be doing? Back in March of 2020, when we seen the markets take a huge hit when everything was shut down due to the pandemic, I told everybody, look, don't fuss. What you should be doing is thinking about the stocks that crash and figuring out which ones are going to rebound once the economy is open again. And sure enough, that's what happened. I showed you guys this fictitious portfolio that I had. We picked out the 3 or 4 cryptocurrencies and made a ton of money off a $10,000 investment in each one of them. The biggest one being Ethereum. It was $147 a token back then. I said if we dropped $10,000 into Ethereum and left it there, when it hit its peak high, the return, and this literally was in less than 6 months, your $10,000 investment had a $290,000 return. You should be studying right now which stocks you should get into once the market starts to recover and position yourself. I suggest you do it into gold and silver. So when the market crashes, everything is done. Then you start selling back your gold and silver, taking that money because it hasn't lost any value. Even if the dollar does lose its purchasing power, your gold doesn't. And when you exchange it for that cheap fiat money, you turn around and invest it into the stocks you know are going to rebound. So you take some of that gold and silver that you sold and you buy in heavy into Microsoft, or you buy heavy into, I don't know, Nike, or you buy in heavy into whatever stock you know performs great. Usually what I suggest is to go take a look at the investments that people like Warren Buffett are into, even people you don't like George Soros. Go look at their portfolios. What are they heavily invested into? Then that's what you buy into, because they know. They get all the insider information. So as you start seeing what they're buying into, you do the same thing. You'll benefit from that ride. Right now is a good time to get out of the stock market before it really collapses. Put it into gold and silver and hang tight. Michael Burry sold 94% of his stocks. 94%.
And what's interesting about these sells is he was getting out of everything, right? So he was stopping his bet against Cathie Woods and her ARK funds, selling out of Google. He even sold out of his bet against Tesla. And if you look on the guy's Twitter, he used to all day, every single day, when he still had his Twitter account, obviously it's deleted now, he used to rant and rave about Tesla and electric vehicle companies being overvalued all day long. But if you look at this now, he sold out of his bets against Tesla, right? So this was a Tesla put. It was a pretty large one too. I mean, he had millions in it. That's gone. And then on top of that too, you'd think, okay, maybe he's finally admitting he's wrong on Tesla if you happen to think he's wrong about Tesla. The extra weird thing is that Burry has been talking about how inflation is going to wreck the economy forever. And he thought the best way to approach this was going against treasuries, right? But he even sold out of his positions in the 30-year treasuries, both the put and the call. So what does this mean? Why is he selling out of everything, whether
See, I get where this guy's going with this. He's trying to say that because he got rid of his puts, he thinks Michael Burry believes the opposite's going to happen. That's not what's going on. They sold out of all their positions so that they're liquid. They usually put it into tangible assets like paintings, real estate, gold, silver, collectibles, or they have the cash on hand. I'm showing you all the little tricks of the trade and how rich people continue to get rich. They use insider information. They know when the market's about to crash. They sell when it's high, wait for it to crash. Once it crashes, they buy more of it when it's low, and they benefit from the ride back up. Gold and silver is your protection while the market crashes. People are moving into those positions. 94% of his holdings are now sold. Do what they do. Now let me show you an example of assholes and why you can't trust these damn people. Let me show you the perfect example of somebody in power obviously manipulating the markets for their own personal benefit. This jerk here, Bill Ackman. Watch how this guy makes billions of dollars by manipulating the market, and he does it obviously. You ready? Watch.
18th, 2020. Billionaire hedge fund manager Bill Ackman calls into CNBC in a complete panic.
What would the president be asking the American people to do? He's not saying, he's not saying to storm the beaches at Normandy, right? He's saying, go home.
The infamous Hell is Coming interview shocks the markets. It appears that Ackman was distraught, crying over the fact that the country and the world were falling apart right in front of our eyes. But as time went on, we discovered some facts that made us rethink Bill's motivations. Turns out Ackman wasn't crying because he felt bad. He was crying because he couldn't believe how much money he just made off his puts.
Bill Ackman turns 27 million bet into 2.6 billion. For those of you who don't know what a put is, that means this individual is betting that the market is going to crash. So he invests $27 million, bets on the market crashing, calls it into the news, gets on there, acts like he's crying, says hell's coming. Everybody better get the hell out of the market. That news is then carried over into other networks. People see this and they get scared because they're like, hey, Bill Ackman, he's somebody we could trust. Yeah. If he says hell's coming, well, we better get the hell out of the market. And he got the hell out And sure enough, a lot of the stocks plunged. He helped manipulate the markets. Then as soon as the markets plunged and he made his money, he got out of the puts and then bought back in to benefit from the rise. So he benefited twice. He benefited from the crash and then benefited from the recovery.
How much money he just made off his puts. Puts that he bought weeks before his interview, resulting in a $2.7 billion gain from a small $27 million investment. Many questioned his integrity and motivations for pushing panic while holding bets that would profit off the panic itself. Now, nearly a year later, Bill is in the spotlight again for something similar. A prediction that, if right, could spell the beginning of the end for the US markets. In a confusing set of tweets, Ackman had the following to say about the Federal Reserve. He claims he gave a presentation to the Federal Reserve Bank of New York in order to share his views on inflation and Fed policy. The summary of this presentation was that Bill and his team think the Fed should taper immediately and begin raising rates as soon as possible. Now think about this for a second. Why would a hedge fund manager who owns mostly equities want the Fed to taper? We've discussed this on this channel many times. Tapering would be the right thing to do, but it would also mean that the stock market would take a massive nosedive. Of course, it's hard to imagine that a billionaire...
What did he say? Tapering is the thing to do, but this would cause a nosedive on the market. What did Jerome Powell say they were going to do in 2022? Tapering. What else did he say they were going to do? Hike the interest rates. What type of effect would that have on the market? They're going to take a nosedive.
Hedge fund manager would, quote, do the right thing by ignoring his interests and pushing forth a policy that would ultimately result in heavy losses for him and his clients. 10 minutes later, Bill tweeted what we all suspected. He was in fact short, claiming that, quote, as we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in rates could negatively impact our long-only equity portfolio.
Once again, he is used in the media, whether it's social media or network media, to help manipulate the public so that he could benefit from it. So his equities firms are buying into puts, which means they're expecting the markets to crash. Whether they help that to happen or whether they know it's going to happen, either way, they're betting on the markets to fail.
That's a nice way of saying, I'll make a ton of money if the Fed tapers. This calls into question the integrity of the Federal Reserve as well. Why are they even taking a meeting with a hedge fund manager who has a vested interest in pushing a certain policy?
That's a good question, don't you think? Why the hell is the Federal Reserve talking to Wall Street at all? This is how the truly rich stay rich, because they discuss amongst each other what it is they're going to do. The Wall Street hedge fund managers run out, position their portfolios in the best way they can benefit. That's why I always say, who cares what they say? Watch what they do. If all of a sudden you see all the hedge funds buying into puts, that's what you should probably do with your portfolio as well. If you see all the hedge funds getting out of puts, that's what you should do. Do what they do, not what they say.
That would be like Bill Belichick presenting to the NFL leadership why his team should only play at home. An outrageous proposal that, in my opinion, is a massive conflict of interest. Now, to be fair, not everything about this proposal is bad. Ackman has made his strategy clear for 2022. It's one that will make money either way the market goes. If you listen to his latest interview, his strategy is simple yet effective. And it's one you can replicate for your own good. Oftentimes in the comments, there are many who ask how to protect themselves against this threat of high inflation. And here it is.
The emphasis of our strategy is owning these, what I call super durable, undisruptible companies, right? People are going to be ordering pizza and having it delivered, and they're going to eat it. And if for $8, you can feed a family of 4 with a pizza pie. That's a pretty good proposition. And you get it delivered in 28 minutes by a smiling person who comes in a box and keeps it warm. That's going to continue. Hilton. Hilton's stock was down the most, I think, of anything we owned when the pandemic was announced.
Once again, watch this jerk. People should be in an uproar over this type of thing. First of all, we have now some bickering going on within Congress. You have a group of politicians saying that it's not fair for politicians like Nancy Pelosi to continue to have insider information and benefit from it. They want to pass new rules or laws prohibiting any politician from buying into stock or selling stock. because they benefit from it. Nancy Pelosi's family has made hundreds of millions of dollars off insider information. And when they approached her, and even this of all things, I actually agree with Seabiscuit on this one. AOC said, hey, this is not good. We should not be benefited from it, and suggested that they pass stricter rules on it. And of course, Nancy Pelosi said, hell no, we're not doing that. We want to continue to screw over the American people and benefit from the information that we get, and who cares about the rest? Having said that, once again, watch this master at work. I don't know whether to admire him or really just be disgusted by this pig. It's a combination of two. Obviously, if you're in the same position, what would you do? I guess is the better question. Watch again, like he done before with manipulating the markets. Let's watch the master at work.
Meaningfully increased our position in the company in the mid-50s. Stock today is 140. So when you own businesses that have very, very attractive economic characteristics and they're largely immune.
Real quick, look what he said. So in March 2020, when the stocks plummeted, remember they dropped because of the closures? Well, the Hilton stock went all the way down to around $50. Well, they knew the same thing that I was saying. At that time, I was telling everybody, do you really believe these stocks are going to stay this low? I think in the beginning, I was saying, just to simplify things, people should take a look at the hotels in Las Vegas. Some of them had dropped 50%, some of them 70% value. And what did I say? Do you really believe they're going to stay down here? As soon as the markets opened and people were back out in the public and all the restrictions were lifted, these stocks would go up. And I was right. This is what he did. The same exact thing. Watch.
Immune on a day-to-day basis, but they're protected from interest rates moving up or down or commodity prices moving up or down. I think that maybe the single most important characteristic today is going to be pricing power. You know, if the cost of your inputs go up, you better be able to raise price and not lose the customer. And that is true for every one of our companies.
So there you have Ackman essentially saying that the correct way to navigate the markets in the future is to own companies that have pricing power, businesses that people will use no matter what. Even with inflation booming, I agree with Bill that individuals will continue ordering pizzas and Chipotle. Ask yourself the question, would you stop eating your chicken bowl if they raised the price by 10%? Sure, you may be upset for a week or two, but I truly believe most people would continue to buy. But this is not the full picture. There is something Bill will not say publicly. It's very likely that his preferred scenario is that the Fed raises rates quickly. This would crash the markets, including the stocks he talked about, but it will also make him a ton of money on the various interest rate hedges he has as well.
Watch what they do. This is what I'm talking about. These rich people selling out of all their positions. Why? They know tapering is going to happen. Interest rates are going to be hiked. The market is going to crash. They're going to wait till it bottoms out and then start buying into those stocks they know are going to go back up. Some of them will recover quicker than others. This is why you take some of your holdings, put it into gold and silver. As the markets crash, the value goes up for gold and silver. The fiat's purchasing power might be reduced, but it doesn't matter because gold always holds its value. Then when the time comes, you sell your gold and silver and invest into those stocks you know are going to rebound. You have plenty of material to study from. Just go back on certain stocks or Google certain stocks that plunged in March of 2020 and had strong rebounds right after. Those are the ones you want to eyeball and consider buying into when the time is right.
If this played out to his plan, he would then sell those hedges, taking the profits to buy up the beaten down stocks. Ultimately, we know that the Fed would push rates back to zero if a recession was threatened. And again, Bill, just as he did in the infamous 2020 short, would make money from the fall and the eventual rise.
Yep.
Don't forget that while he was shouting hell is coming on CNBC, he was exiting his short position and buying up Hilton stock in the 50s. Hilton is now 140. This was a strategy we've seen before. This interview from March 18th, 2020 showcases exactly this. He shouts over and over again that Hilton stock is going to zero. But listen to what happens halfway through the interview. It's quite an amazing clip. These guys know exactly how to play the game with the media.
Now, take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties, down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. Park Hotels and Resorts. This, stock's down from 33 to 4. This is a spin-off from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Every one.
Hang on, hang on just one second. You say Hilton.
Do you see what happened? The Hilton stock, as this guy is talking, most likely what's going to happen is the Hilton stock's going to go to zero. At the time, it was like $51 or so. It's dropped down to 50. Now watch what happens.
Is going to zero. I mean,
again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done, okay, because no business can survive a period of 18 months without revenue, okay, and stick with me, and that's what happens, okay, if you operate the way we're operating now, okay. Now, let me give you. So that's a very, very bearish thought.
Now watch what happens when he flips.
Okay, and I've been super bearish, but I got bullish. Okay, and the reason why I got bullish, and I've been aggressively buying stocks, including Hilton today. Okay, and I've been buying all the way down. Hilton, restaurant brands, Starbucks. Walk your way through our. And the only stocks I'm not buying are companies who are on the board and I'm restricted.
So that should confirm your.
They knew, all of them, that certain hotels that were hurt due to the shutdown in March, that these were severely undervalued, and that once the economy opened back up, the values would increase. That was the same thing I was talking about back when I was doing my videos in April. That, hey, I know the markets are down, but you could benefit from it. And I chose Vegas hotels as the ones to keep an eye on. But then I pretty much switched because I was more interested in gold and silver miners. And I threw it out there. Hey, what do you guys think? And everybody's like, yeah, let's watch gold and silver miners instead. And that's what we did. Even so, my entire portfolio outperformed every single hedge fund around the world. Now, the average gain on hedge funds from around the world for the year 2020 was at 26%. My fictitious portfolio has something like a 64% return. In all fairness, I had a very small handful of stocks we were watching versus hedge funds because they had a lot more investments than I did that we were keeping an eye on.
Suspicions. The strategy is simple. Buy a short hedge, start a panic, sell the short hedge, and buy up the beaten down stock. Profit on both ends.
So there you go, right there. A guide to billions. Get short positions, cause panic, sell short positions, buy beaten down stocks, rinse and repeat. You see what I mean? Why isn't that against the law? This guy has information that the public does not have. But when he uses it to personally benefit, that's not a good thing. There should be a law against that. Oh yeah, wait a minute, there is. These people never get punished. This is what AOC was talking about. She jumped all over it saying these Democrats, these veterans, not just them. We know that a lot of the Republicans did the same thing. So they get this insider information. They use it for their benefit. So watch what they do, not what they say, and you can become rich. There's a group on Telegram that this is what they do. They monitor the actions of our politicians. Whenever they sell a specific stock, they say, hey, we should sell it too. Whenever they put a put on a specific stock, they say you should do the same thing. Whenever they buy a certain stock, you should do the same thing. Sure enough, their track record has been pretty phenomenal in this group because the politicians get insider information. Do what they do, not what they say. So when people keep telling me, no, Pimpy man, the dollar's fine, it's strong. No, it's not. It's not. It's just an illusion. When you see housing market explode like it did and the value of houses go up, it's not because the home is actually worth that amount. It's because the purchasing power of the dollar is so weak that you have to sell your house for more dollars just to make up for the dollar weakening. Yep. So let me show you what I'm talking about. Purchasing power of the US dollar over time. In fact, $1 in 1913 had the same purchasing power as $26 in 2020. That's terrible, man. The purchasing power of the US dollar has fallen over time as money supply has grown. So when the money supply grows, then the value of the dollar decreases. That's why I was saying in my other videos, how the hell is the dollar strengthening when we're putting out trillions of dollars? That's impossible. It's BS. Think supply and demand. So what is purchasing power? The purchasing power of a currency is the amount of goods and services that can be bought with 1 unit of currency. For example, $1 could buy 10 bottles of beer in 1933. Oh Lord, God in heaven, I'd be so grateful if you can make that happen again today. I'm just kidding. Not really. Today, it's the cost of a small McDonald's coffee. So you went from buying 10 bottles of beer in 1933 to 1 McDonald's coffee for the same dollar. Its value in terms of what it can buy has decreased over time. But here's the thing. It really decreased once we got off the gold standard. It says as more dollars come into circulation, average price of goods and services increased while the purchasing power of the dollar fell. By 1929, the value of the consumer price index was 73% higher than in 1913. But a dollar was now enough only for 10 rolls of toilet paper. See, so the consumer price index increased, but the purchasing power decreased. Money supply, the M2. You notice how all of a sudden under the Biden administration, what they stopped doing? Reporting the M2 number. Because it affects the markets. They don't let the public know about that. See, that's what I'm talking about. These sneaky little things that they do to hide the truth from us. You know, we should have an issue with this, but more people are unaware of these types of little tricks. Money supply in the U.S. has skyrocketed over the last 2 decades, up from 4.6 million trillion in the year 2000 to 19.5 trillion in 2021. But here's the kicker. 20% of that money was created just in the year 2020 alone. The effects in the rise in money supply was amplified by the financial crisis of 2008, and more recently due to the RONA pandemic. In fact, around 20% of all U.S. dollars in the money supply, 3.4 trillion, was created in 2020 alone. So if these people are telling you the purchasing power decreases whenever we print more money, then what the hell do you think's happened since we started doing quantitative easing back in 2008, 2009? Well, the money supply has increased. And especially once the RONA broke out, that was just an excuse to increase it even more. And they did it by trillions of dollars. But yet we're watching the value of the dollar's strength go up. How the hell is that possible? That's why I keep complaining in the videos. The more money we create, that money value should be going down. The fact that we are the world's reserve dollar is helping it big time. But as countries get away from using the dollar as a reserve dollar, that's going to affect the value of our dollar. This is why I keep saying you should jump into gold and silver. Watch what they do, not what they say. Michael Berry selling out of 94% of his stocks. Tell you what, they're all positioning themselves to buy the stocks at a much cheaper rate, which means they anticipate a market crash. Then you see jerks like Bill Ackman manipulate the markets by using the media to do so and benefited from it is something we should all be raising hell about and making illegal. And the fact that our politicians do the same thing and benefit from insider trader information, we should be arresting them. It was so bad under the Obama administration that they did pass a law saying that they would have to pay a fine. But as I said in other videos, the fine was $250. Yeah. So it's okay for politicians to go out there and make millions of dollars. And if you get caught, you're going to have to pay that stiff fine of $250. Yeah, that's going to discourage people from doing so. Look, do yourself a favor. Protect yourself and your retirement and your family's wealth. If you don't start positioning yourself into gold and silver, you're going to get hurt in the long run. If you see hedge fund managers selling 94% of their stocks, it's because they're getting ready to position themselves to buy those same stocks at a much cheaper price. You should probably think about doing the same thing. Anyways, that's it for now, you guys. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.